Cash isn't king. The person that owns the debt is king because he has the gold. My name is Darius.
And I'm Carmen. How about that for a doozy? By the end of this video, we are going to help you realize the power of owning debt versus being a consumer. So go ahead and subscribe to our YouTube channel and hit that notifications bell so you're notified every time we post new videos.
Now, this story very much resonated with us when we realized how much money we were spending on interest. Mm-hmm. Now, the next part of that is the person or business that it was connected to. It was the bank. The bank is the one that has all the money, but why are we doing the opposite of what the banks are actually showing us that they're doing as far as making money? Mm-hmm. Well, yes, cash is king, or at least that's the idea. Not necessarily, because when you have cash, what you have is you're losing money because you have inflation.
Absolutely.
You're losing money because you're not making money. Mm-hmm. That's the other thing about cash. But what you also have is you don't have any assets. You don't have any versatile assets.
Yeah. You don't have any cash flow.
Yeah.
You're not making any money. You're spending money.
Exactly. Now, when we think about the assets that the banks don't have as much cash as we think they do. Mm-hmm. So if that's the case, that means maybe it's more important for us to own debt than cash itself.
Mm-hmm. And this is just a mindset shift that we want you all to start gnawing on, right? Mm-hmm. Because for us as consumers, we were programmed to have debt, right? We need debt so that we can build our credit score. We need to pay it back a certain way. We need to have a certain ratio, with our debt. We need to play the game, right? So that we can have debt and show the banks that if we ever need money, that we're good stewards of using the money when it's really our money in the first place.
But that kind of sounds like programming. We were programmed to think that by having debt, we have something. We have the things that it bought us, but what it really bought us is a monthly payment that's more than what we got the loan for in the first place.
Absolutely. It's not buying tickets to Disney World, right? We're the ones riding the rides over and over again and saying, get me off of this ride. How do I get off of this ride? But we bought in Disney World to begin with, right? So when we think about the United States, we have over $32 trillion of debt. So if we're just thinking about the United States government, clearly as a consumer, we're looking at debt from from the wrong lens. And that's just all about owning debt. So when we think about being a cash flow creator, when we say own your own debt or own your own lifestyle, right? It's how can you take advantage of you being a consumer and keeping more of your money, but just by making small tweaks within your banking system, which Darius and I teach. We teach a concept called infinite banking, and that's all about using a whole life insurance policy to finance your lifestyle. And the reason why this is so important to us and to make sure that you all understand this concept is because we're killing two birds with one stone. One, you have life insurance to ensure that your legacy can live on and that your family can afford to maintain your lifestyle should something happen to you, because 50% of Americans do not have life insurance. And of the 50% that have life insurance, what was the stat? Like 20% of them are underinsured, meaning they don't have enough insurance. Mm-hmm. So that's something that we really need to be woken up to, folks. We want to make sure that every home in the United States has life insurance first and foremost. The next part about that is just flexibility and having more control over being able to have access to cash and capital. And you can have access to capital within a whole life insurance policy by accessing the cash value. Again, if you're new to this channel, we talk about this all the time. You can check at this video up top by clicking on the link, or you can watch our master classes if you click on the description below, just so that you can catch up on this concept that we're talking about. But if you want freedom, if you want flexibility, this is all about what we teach. And we want you to start understanding the money game from a different avenue so that you can play it most strategically for yourself. We want you to stop consuming, stop getting in debt, and start owning debt. So either take over your debt and make those monthly payments that you were paying back to yourself so you can recoup those funds, or start owning other people's debt. Help your family out. Everyone that you know has a car, has a house, has credit cards. If you have cash, then maybe start using those monies and lending it out at a cheaper rate, more affordable rate for your family members so that everybody can help each other, right? You're getting the cash flow and you're helping them pay off their debt faster.
Right. And I kind of want you to look at it as like the game Mario. Super Mario Brothers. When you first start, you're a small character. You're a small guy. But when you get that star, you're able to go through the level and knock down. Yeah, you can go faster. You can jump farther, and you can go through whatever obstacle comes in front of you when you're playing the game with that. What we're saying is that you can use your life insurance policy as that star, because what happens is the leverage that you're using to get that loan is your own cash in the first place. The difference when we use the bank, we are using what we're trying to buy as leverage. We're using our house as the leverage. And if we don't make a payment, then we lose our house. We're using our car as leverage. So if we don't make a payment, we lose our means of transportation to get to and from the way we make money in the first place. We're using these things as leverage. And when we don't make a payment, what happens? We lose it. With the insurance policy, when you own the debt, when you can control your own debt using your life insurance policy, meaning that you get the cash value and you buy your car as an example. If you miss a payment, you just tack that on to the back end. You have that star so that you can continue to go through life faster and easier. And the nice thing about making those payments is the interest that you would have paid to the bank is going back to you. And the way that works is the insurance company charge you simple interest, the exact same interest, no matter what you're putting it on.
Yep.
So if you were to get a loan to pay off your debt that's at 20% interest, the difference is your money, because you're continuing to play this game the only way it can be played, and that's continuing to make those payments and to realize the difference in the interest.
Yeah, and this may sound kind of complex, but it's really not, because what you typically do these days is you go to the bank and you request a loan. And depending on if you qualify, you'll be granted that loan. That money will be deposited into your account, and then you use it however you need to spend it. And then you have to make monthly payments back with principal and interest, right? So we're not saying do anything different. We're just saying you knock on a different door for that loan. So in this instance, you would contact the insurance company, which we do. We get a loan from our life insurance policy. That money is deposited into our account, and then we use the money however we see fit for our financing purposes. And then we create whatever the terms and the monthly payment is going to be, because the life insurance company doesn't tell you how much to pay back and when, like the bank does. They make it a lot more flexible, because for them, at the end of the day, if you don't pay back your loan, which we're never suggesting that you do not misunderstand me. I'm just saying, if for whatever reason
you miss one payment,
you miss a payment, and if you were to pass, like for example, because this is life insurance, they're going to deduct the difference, or what you owe, from the death benefit and pay the rest out to your heirs. So that's how this whole system works, and that's how the insurance company ensures that they have their collateral, right? Like Darius was talking about, the bank, their collateral would be the house or the car, whatever, that their leverage is. With the life insurance company, your death benefit is the collateral. So for us, it's all about using that system, because every time we make payments back into our system, that money is available. And anytime we make extra interest payments, that money is going to grow at a compounded rate, which grows our system entirely. So again, just understanding what financial products are available to you and how you can use them for your benefit is going to be the difference between you getting that star and being Mario and maybe having to redo the levels over and over again because you're not moving forward.
Yeah, it's the difference between being a character in a game where you're used as a pawn, or being the person controlling the character. The person that's being controlled are the people who have the loans, who have the loans and don't own it. They have the loans, don't own it. They have the mortgage notes, or they have the car notes. They have the credit cards. And the only thing they can do is maintain those minimum payments. Now, they didn't use their cash as leverage. They're actually spending their cash. There's a difference between leveraging your cash and spending your cash. Once you spend your cash, you no longer have it. If you use it as leverage, what you can do is you have your money still available, and you're still able to maintain the loan itself.
Absolutely.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy, or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School.
So now we talked about debt. How does this work with investing? A lot of people that comment say, well, how does this work for me if I don't have any debt? Well, the same thing works with investments. When you invest your money, let's say you invest your money on your savings account, that money's no longer there. When you leverage your cash in your whole life insurance policy, your money is still there and you can use it as collateral for something else.
Yeah, well, with everything that we talk about with this whole process is we think that the foundation of your banking system, your investment system, your cash flow system, let's just call it that, the foundation of your cash flow system should be a policy. You put all of your money, as much as you possibly can, into a policy, as much as the insurance company will allow. And then from there, you take the cash to invest and to diversify whatever your assets are. So you don't just put it in the market. You put it in real estate. You put it in commodities. You put it all over the gamut so that you can make sure that you have to, thank you. That's what I was looking for. So that you have all of the asset classes covered. And that's true diversification. So starting with a policy, allowing that to be your foundation. And then you start slowly and start getting educated on every asset class to make sure that you have your money in a well-rounded fashion investing.
And another thing is you were saying that when you use your cash, you're no longer able to earn interest on your cash because it's not there. When you leverage your cash in your whole life insurance policy, you're still earning interest as if the money is there because it is. You use it as leverage, as collateral. So you're able to earn interest from your investments and continue to earn interest in your insurance policy.
Absolutely. That's the huge nugget, right?
Yes.
Is interest on top of interest. We got compound interest in the policy. You got whatever interest you're earning from your investments, and then you put those two together and you have an amazing cash flow system. So if you want to know more of the nuances of how to create a successful banking system, check out our next video.
Remember to own your own lifestyle,
or someone else will.